Hello, everyone. Welcome back. I'm here with investor Benj Gallander. We're here for another interview. Benj, how you doing today?
I'm doing very well. How about yourself, sir?
Doing good. I've got the Italy hat on. We have the soccer victory from yesterday, and I'm looking forward to the Euro Cup finals right now. So
And you think that Montreal is going to win another game against Tampa?
that's going to be tough, right? They gotta win every single game to get the Stanley Cup. Now they might squeak out another game, but it'll be tough to win all of the games in a row, I think, right?
Next to impossible. It's only been done once in history.
Yeah, it could happen, I guess, right? It could happen, but I'd say it's very unlikely. I would bet against it, probably.
It's, they're a long shot. That's
Yeah,
for sure.
that's good. Ben, you contacted me recently. Last time we spoke, I think it was February, late February. And the market was really hot when we were talking last time. So it's kind of nice that you contacted me, and now the market's gone through a couple of shifts since then. And after we spoke, the market actually just kind of fell down very, very harshly. Then it went up, then it came down, now it's up. So it's been going through kind of a choppy season since we last spoke. Do you have any commentary on how you viewed things since we've spoken recently?
Well, and markets are at record highs. You look at a lot of the financial ratios, the debt ratios, etc., price earnings, etc. One can easily argue that under normal circumstances, it doesn't make any sense. But given that so much money is being pumped into the system by the Canadian government, US government, and governments all over the world, people have to find a place to park their money. So that's what they're looking for. And a lot of people simply don't want to invest in GICs and that ilk at, say, 1%. They want to put their money where they can potentially get a better return. Of course, it's higher risk doing that. But people keep on putting the money into the stock market. And I mean, you and me know, as hopefully all the listeners know, at some point the party's going to end. But the question is when. So you don't want to get out of the market too soon, or you don't want to sell a lot of things too soon before the market does come down a long ways, because then you're going to pair the possibility of your gains.
Now, just a little follow-up on that, because I've been kind of talking to people about this recently. It's pretty much impossible to time like a top or a bottom. We got lucky last time we spoke that it kept dropping after we spoke, but we didn't know that. And then it went right back up anyways if you got out, right? So that's what you're talking about. Because you can't time the market like that, do you just kind of encourage people to always take maybe some profits, whether that means 10% or whatever percent that means, so you have cash when something happens?
Well, we don't ever look at 10%. We're always looking at returns of 100% plus, 2, 3, 400%. And as you know, whenever we buy a company, we always set an initial sell target. So we're generally looking at selling some, if not all, of the initial sell target, and maybe letting some of it run. So if I perceive the markets may take a big hit, I might sell more of the companies that have hit the initial sell targets or a higher percentage. I won't sell stocks that have had a 10 or 20% gain just because I think the markets might come down soon, because I know how I can make mistakes.
Mhm.
Same thing when markets are down at the bottom, or I perceive the bottom, I will be looking to buy quite a bit at that point in time. So, but tops are difficult to time, but we've been pretty good in terms of predicting some previous tops. We haven't always got it right. I thought the markets would take a further beating this year and stay down longer. I've been wrong. The only way that it's cost me, though, Mike, is I could have had more money invested in stocks,
Right.
and pulling some of the money off the table, like Bank of America, that I sold at 38.76. It's around 41 now. I could have had potentially greater gains,
Mhm.
but then we bought it at $6.76. So, we took our 400+% gain in the dividends and we ran with them.
Yeah.
But it is hard to time the top. But if you're within 6 months of when a market gets killed, I think that's pretty good.
Yeah, and I think the other thing is too that if you don't have new savings to put in to take advantage of an opportunity like COVID or like anything that might come up, you're kind of just stuck in the positions you have. So I like to have a little bit of cash available in case there's a problem. Even if I have a piece of real estate, you have a line of credit or something to back you up just in case something goes wrong. And I think that a lot of people have just been kind of caught holding because they thought it was going to go up nonstop. So you might be holding Tesla right now and it dropped quite a bit, right? Well, you might have to be patient with that one for it to go up again, right?
Yeah, it's a fascinating game in many ways, that's for sure. We had a couple stocks involved in the whole meme thing, Reddit, Wall Street bets. One was cost. We bought $1 and change. It went as high as $127. I sold
But
out on the way up. I wish I had sold out at a higher price. We also sold 80% of BlackBerry when it went up. I wish I had sold the whole thing.
mhm.
Um, but it's very difficult to know. We're very disciplined, as you know, and we try and stick to our knitting, but we still make lots of mistakes. The question is, how much do the mistakes cost? How much do you leave on the table? But we'll never get it all right.
No.
It's the nature of the beast.
And I think that's the thing is to be able to embrace the fact that there will be random things that will happen that will were not part of your game plan and they could never have you would never have seen them coming. Whether it's Wall Street bets or the COVID market drop, whether it's positive or negative, you could have never predicted those things.
Yes, and I certainly didn't. If you'd asked me when Reddit and Wall Street bets became very popular, so to speak, um, I knew virtually nothing about them. And then I went and did a study to try and understand them better, to hopefully make more money from them. Again, it would only be one factor in terms of our investing. We have to buy companies we think are going to turn around. If they have a huge short position and they could become one of the meme stocks, so much the better. But, that's very hit and miss.
You're gonna have to start digging through all the online forums to keep up with all the young guys that are running this stuff, I guess, eh?
Well, I glance at them more than anything. I don't think I'll dig too deeply. Um, it's a whole new world, and technology is changing the world, and I try and keep up to some degree with technology. But some of that it's really just craziness to a large degree, and a lot of those people are going to get hurt really badly because when the margin calls go out, they're going to get called. They're going to have to sell. Their compatriots are going to have to sell, and some of them will lose a lot of money. But people always talk about that, even after 2000 with the tech wreck. They said, oh, people lost so much, but many people made a fortune
Yes.
by getting out earlier. So there's certainly at least two sides to that equation.
Yeah, and you know what, too? I've noticed that CNBC and BNN are covering when they see that the Wall Street bet folks are talking about something and they even see it coming into the market. It's actually a topic of discussion every week now. So, if you just watch the news, you might hear about it.
Yeah, no, that's possible. Often when it's out there already, um, one cannot make as much money from it, but it's worthwhile being cognizant that it is out there because it can aid. And then if it gets out there to the general public, so to speak, some people might hop on the bandwagon.
Yeah, exactly. And I mean, when there's millions of viewers potentially seeing something, a bunch of them might just jump on, right? So it's one of those
That, that could happen after this. Once you start attracting those millions of viewers and the couple stocks we're going to talk about today, who knows what might happen.
things. Well, that's a good segue. That's a good segue. I think we have a couple companies we're going to look over here together. Let me just share the screen. And Benj, I think these are a couple of companies that you said you've actually either done quite a bit of research on or maybe even already stepped into. I'm not sure if that's the case for both of them. Which one you want to start with here, Benj?
Oh, why don't we start with BDI? No, we do own them both. And as a general rule, I talk mostly about companies that we actually own, um, just because that's how we do things. If there's stocks that we're looking at buying, we don't talk about them. And once we send them out to our subscribers, we generally don't go public with them for, well, certainly at least a month, often a few months, often we never go public. So our subscribers have the benefit of getting that information before the public gets it.
Okay, that's awesome. Now I've zoomed out and done a monthly chart. So this goes way back to 2014 here. And there was a huge drop off where it's kind of flatlined now. Is this part of the story of why you like it, Ben?
Oh, absolutely. As said, as we mentioned before, I'm always looking at 100% plus gains. We bought this one in 2018 at $2.11. Our initial sell target is 1024. The stock really, after we bought it, didn't do much except go down. And I wish I had bought more, but I didn't. But recently it's been catching a wave upwards, as you can see in the chart. And we think there's more to go. They've been expanding. They've been taking over some other companies in the field. They do mobile homes. A lot of their work's in the oil and gas pack. So when oil and gas prices got killed, this stock got hurt with them. They've also expanded, though. They have educational portables. When they have wildfires in certain places, they're useful there. They're in Canada, they're in the States. So it's a company that continues to grow. But I want to point out one of the negatives, because if anybody's thinking of buying it, you should know the negatives. The major one is their debt load is higher than I like to see. So that's a potential problem. Another one is that they've been losing money for quite a while. I think that next year they will make money. Once they actually make money, that'll probably give the stock a real kick upwards. So I also really like the management. They're very straight laced. They don't mess around. Trevor, he's probably a much funnier guy in person than when he does conference calls. But I think it has a lot of potential. Oil and gas, as we know, the prices have gone up incredibly,
Mhm.
and this company will benefit from that and is benefiting from it.
Okay. And I mean, I pointed out on the chart there, I just did a little measurement tool. I mean, you'd make between 300 and 400% if your predicted price target is hit there. Did you pick it based on 400%? Did you pick that because it was kind of an area where the stock was hanging out before?
Yeah, I mean, it's traded for a long period of time above our target of 1024. When we bought in, of course, I was hoping it would turn soon after, and I was wrong. We're fairly patient investors. Um, it has, it's finally started to go up. We don't buy in right away when a stock gets hurt, because we don't try and catch the falling knife. Once I so-called discover a stock after it's beaten down, I won't buy in for a minimum of 6 months. Often it's 3 or 4 years later. So again, we sit back and wait and then hope that it'll turn. So this is one of my favorites. I believe it's the largest holding in my portfolio right now at Contra the Herd. So if you'd asked me a year ago, it was much, much smaller. I will know today how much of the portfolio it actually is. I would guess it's about 14% at this point in time.
Okay. It's interesting because obviously you've been doing this for a while and it's worked very well for you, and you wouldn't be doing this unless you were repeatedly having success. Some people, especially if they're younger and they're part of the current hot market, they're kind of trained that you just always make money all the time and it's quick. A lot of people get trained that way because that's what the market's given us, so to speak, recently. Hearing the fact that you're going to hang on for a 300-400% return, that's huge, by the way. But some people might see a gap there where it's like, but I have to just hang on to it and be patient, and it's not moving right now. What's your advice for someone who might look at that and say, well, this isn't moving hot and fast right now. How do I hang on to it?
Well, those people should not invest like us. I mean, when I was regularly on BNN Market Call, Andrew Bell used to say all the time, how can you be so patient? And it's harder to be patient now because of iPhones, the internet, so much information is coming in all the time. Disciplined, and that's key. And remember too, if you buy a stock and get a 20% gain, and then you're going to have to pay the tax man right away.
Right.
Assuming you're paying taxes. So for us, when you get a 300-400% gain, it's much more tax efficient because you've got gains on gains effectively. So this to us makes a lot more sense. In the case of BDI, it doesn't pay a dividend. We love stocks pay a dividend, as I think you've heard me say.
Right.
Dividends allow me to be stupid longer. So if I'm getting a 3 or 4% dividend, then I've got some money coming in. I've got the dividend tax credit. And the key, Mike, is, it isn't necessarily how much you make, it's how much you have in your pocket after your partner, the tax man, comes and takes his or her percentage. So that's absolutely critical. We try and be very tax efficient. But a lot of people simply do not have the patience we do. I mean, our returns past 20 years, it's 18.1% annualized. So it's certainly amongst the best returns out there, but we do have losing years. Most years are up and some are much better. But if you don't have patience, don't do what I do. You have to go and look at yourself. But historically, it is known that active traders do not do as well as passive traders. It's plain and simple. The stats are out there. So that's huge.
Yeah, I would apply the same to real estate as well in many ways, because again, you're paying the tax man when you're flipping homes, but if you retained real estate, it's gone up tremendously as well, just like stocks have over time. And there's people on either side of that discussion, right? So that's an endless debate.
Yeah, I think, I'm not into real estate the way I believe you are. Basically, we own a home, a chalet, and half a duplex in Montreal,
Mhm.
but they're all being used. And 2 of the 3 by us, the others rented out. So we're just sitting on them. Real estate's going really well.
Yeah.
Hopefully, I'll be in my house for a long time. Hopefully, they'll carry me out of here at some point, not in the near distant future. But, I'm looking out on the river and it's like living in cottage country. So, and I'm in Etobicoke, 20 minutes from downtown Toronto.
Perfect, right? I mean, it's a great location. Yeah.
Great, and we're going to get you here, hopefully, not too long.
Yeah, for sure. Let's go over, we're going to end this in the next 5 minutes here. I don't want to keep you here too long. Let's go over another company here. Thanks for sharing these companies, by the way. I didn't request for Benj to do this. He's been nice enough to mention some companies he's interested in. So from BDI, we're going to go to MBT. And is it the New York Stock Exchange ticker here?
It is. It's an ADR. It's a Russian company. So right away, you've got to take a look at geopolitical risk if you're thinking of it.
Right.
They're the number one telecommunications company in Russia. They're also in Belarus. They're in the Ukraine. They're in a number of countries that are dangerous to some degree. So you have to think about that when you're buying. We picked it up in April, so relatively new holding at $8.18. Our target price on this one is $18 and change.
Oh, wow. Wow.
Well, 18 and change is just 100% gain. So it's not that much. If you go back and look at it, it traded over $40 in the past.
Oh, even if I go back further. Wow.
There it is.
Okay.
So
wow.
It pays a dividend that currently about 8-9%. The CEO has stated he wants to increase the dividend, but they pay dividends in a different way than Canadian and US companies. These guys pay a dividend twice a year. And over the past 3 years, it's varied from 22 cents to 60 cents.
Oh, wow.
Last year, they decided to pay a third dividend, a bonus. So even if the company does nothing, I'm getting an 8 or 9% return.
That's huge. That's huge. That's like lending money as a, maybe for a second mortgage or something. That's pretty big money.
It is big money. And if stock markets get killed, hopefully they'll keep on paying it. So they're in telecommunications, they're into the internet, they're into esports, they're into a number of different areas. But again, I'm hoping for both the dividend and capital appreciation. Now, it's gone up nicely since we bought it. Often we find we buy a company, it does go down. But this one has gone up. It's trading, was it?
Oh, look, you bought it almost at the bottom here at this recent drop after COVID, and you caught this run up.
Yeah, it's been a nice little run up for us. Hopefully it'll continue. Of course, it'll go up and down. But we like the idea that we're playing with a major player. They have big league partners in terms of Ericsson, Vodafone, and some others. Um, Again, the political risk is rather large. Potentially, if the problems between the US and the USSR become greater, the US can say, we're not going to list you anymore. I don't think that's going to happen, but we do a tremendous amount of research. And when we're looking to buy, we focus on the risks. So that's absolutely critical with any companies you're looking to buy.
Now, I noticed that you mentioned this one's got more risks in it. So is that why your price target is a little over 200% as opposed to towards 400%? Are you choosing to get out sooner because of that?
This one's a bit over 100%. If you look at the top end of the chart where it's traded, it just makes more sense. The BDI was at a much higher level for a longer period of time. This one wasn't.
Okay.
So I do think that it has greater potential, but if it gets to the target price, odds are I will then sell at least 50%, unless, and I'll just throw this in, it's say November, December, because then we might want to wait to the new year to look to defer taxes.
Okay. Okay. That's interesting. Okay. And I mean, I guess if the relationship with Russia becomes better with other countries, that helps your position too, if that were to happen.
It could indeed happen. There's no question about that. Will it become better? I mean, Donald Trump and Putin were very cozy together. I don't suspect that Biden and Putin are going to be sleeping together in the same way. But, you know, Putin hasn't got along with a number of US presidents in a row up to Trump, and things have kept on going. So I suspect that they will keep on going. And every once in a while, they say, no, we're going to censure you guys. You can't bank here, that kind of thing.
Mhm.
But I don't think it's going to get so bad that they're going to delist companies from Russia.
Yeah, no, that's an interesting one. Again, it's an extra risk. So if someone's not comfortable with that risk, then just like any company, you can choose whichever way you want to go, right? So
Absolutely.
there's a couple of good options there. Now I'm gonna just put on screen your website again here, contratheherd.com, if anyone wants to check it out. Benj posts his returns publicly. He's got over 18% return on average over 20 years. And that's publicly posted. So that's compounding interest year over year. That adds up to being many, many hundreds of percents for Benj and his investors. So he's doing well there, and you can go check out his website. He has a newsletter as well. So is this the main website for them to check out, Benj?
This is, and one day we're going to have to modernize it. And we publish quarterly via Canada Post, where we write about maybe 60% of the stocks that we own. But when we buy or sell a stock, we send an email saying, this is what we bought, this is what we paid, this is our target price, this is why we like it, and this is why we don't. And we do the same thing when we sell. If we sold something today, our subscribers would have an email before markets open tomorrow. They're paying $680 a year for that service. And after the first year, we allow them to renew for 3 years at a lower rate if they want to.
Oh, okay. So they can literally follow along with you on some of your companies that you're targeting and looking at, essentially. And you're going to.
Absolutely. And some people follow us blindly and buy whatever we want. We think that's a mistake.
Yeah.
We think it's better to, pick and choose, see what makes sense. And also, we'll sometimes write about one and say, this one's far riskier than that one. So for some people who are seniors, they might say, I don't want to take the risk. For some subscribers that are 30 years old, they might be saying, you know what, I'm willing to buy into this one for the possibility of a 300% return, even with the elevated risk.
Well, and they're getting a seasoned professional that's analyzing the books and the management and everything in a way that has worked for you over time, so they can trust you.
Well, and it's not just me. I mean, Ben Stadelman, my business partner, we met at Western. It was a few years ago. Phil's worked with us. He's one of our analysts. He's been with us almost 10 years. Mark's been with us about 20 years. Lloyd, who does our quarterly, over 20 years. Our cast has really stayed very much the same. And quite frankly, we're very proud of that. And it helps. We know how to work together. We know our strengths. We know our weaknesses.
Well, you obviously work together because you're staying together, and it's also working because you have the publicly posted results, right? So, why not keep the band together, so to speak, right?
As long as people are happy, and we certainly do make some of the money from our subscriptions, but a lot of what we make is because of the investing.
For
Every stock that we have listed in the investment letter, we actually own.
Oh, okay.
So that's, we definitely have confidence. And there's nothing new. There's no IPOs. There's nothing exciting. In my portfolio, all of the companies have been there for at least 10 years. Um, so maybe more boring than crypto stocks and maybe more boring than marijuana stocks. Um, but in a number of years, we might be buying into those after a decade is up.
Yeah, exactly. You'll. It's not that you're gonna miss the boat. It's just you're taking your opportunities at different times, right? So,
Well, we can miss many boats. And in my book, I talk about, how if you miss one train, another comes along. So we
exactly.
miss all the time. We miss far more often than we get. We're very, very particular in terms of what we buy. So in the portfolio I manage, I believe there's 16 stocks. Um, there's all kinds of stocks that I could have bought last March, for example, a year ago March, and I wish that I had because they've done spectacularly. Some of them have been 10 baggers. But I married these other stocks, and a lot of them have also done very well.
Yeah. And again, hindsight is 2020. I mean, you made your decision, and I'm sure you're still making good money and good returns even with the ones that you've chosen, right? So,
Yeah,
um,
and in the first quarter, the portfolio was up, I think it was 30.1%. It's up about 40% year to date. If I had been smarter, it would have been up that much higher. Um, I don't know if I'm ever going to be smarter, though. We'll, we'll wait and see. Maybe if I take more vitamins or something.
I think if you're up 40% and you're doing it in a way that makes you sleep at night, I think you're doing really good right now.
I sleep reasonably well.
Well, let me just, last time we spoke, we went over your book, The Contrarian Investor 13, and you did mention, though, that the previous book to this one, which is more of a story and kind of, is this a book that's full of lessons and stories kind of related to being an investor?
Yeah, the Uncommon Investor through to the Uncommon Investor 3, it's how we invest, but it's a story. It's the seventh game of the World Series between the Toronto Blue Jays and the New York Mets. You can imagine who wins, given that I'm based in Toronto and even tried out for the Blue Jays once, never made it. So it has a lot of baseball metaphors, and it also talks a lot about investing. Whereas the Contrarian Investors 13, which I still have, the other book's sold out, and 13, it has much more, it goes more in depth effectively. So there's still copies. People can order that from our website. I'm happy to sign it for anybody who wants and dedicate it. You can give it to someone as a present if you want. But I'm very proud. Both books became bestsellers. Contrarian Investors 13 came out via Penguin, then by Insomniac, went to the States. Um, yeah, had a good run. And the other book that became a bestseller was Canadian Small Business Survival Guide, which came out in '88, has been updated many times. Can be ordered from the website too. At one point, it was considered to be maybe the seminal book in Canadian in Canada for small businesses, and they did a US edition, a Chinese edition, which I don't understand. Uh, it was fun. It was fun.
Well, I'll tell you, I got some feedback because some of the people that have been following our videos and everything, some of them did order your book, The Contrarian Investor 13, and they said they actually enjoyed the book and the different perspective you're giving from maybe some of the folks they were following before, right? So,
Well, it is our perspective. It also, we talk about a lot of the other systems, and a lot of the other systems have been combined into our system. So it isn't just contrarian value investing that we do. There's more to it than that. And there's also all kinds of rules that some people might not like I talk about never using stop losses. Doesn't make sense to me. Mental stop losses, sure. Diversify, but beware over diversifying. I don't like dollar cost averaging. I think it's stupid. I think you should know what you're paying for everything. So there's all kinds of rules like that, which should help people get better returns.
That's
And
good. And I mean, sorry, go ahead.
the reason it's called 13 is because there's 13 rules in the book. And that's why it's called the Contrarian Investors 13. Being a contrarian, I like choosing the unlucky number.
That's kind of the cool way to do it, I guess, right?
I like to think so. If you say it is, it probably is.
There you go. You got the baker's dozen there. So,
There we go.
okay. Well, listen, we'll let you go here. I'm sure you want to enjoy some of the day. I don't know if it's going to rain out here today, but get to enjoy it either way. And thanks for spending the time and contacting me to come back on. You're welcome back anytime. I'm not going to bug you, but we'd love to check in with you whenever you have some time for sure.
That's great, Mike. I really appreciate it. Always a pleasure. And as I said, I look forward to us actually getting together when we're a little bit further through this pandemic.
For sure. Okay. Have a good day, Benj. Thanks for taking the time. Take care.
Okay, Mike. All the best.